Welcome back to Fat Bear Pod. It's your host, PB. We got some fresh Bitcoin tea to spill this Wednesday. So grab your energy drink and let's dive into this roller coaster. Bitcoin decided to flex its muscles overnight, bumping up a cool $3,000 to hit 85K. Total market cap? Up a couple percent to 2.73 trillion now. 24-hour volume actually dipped a bit to 77.5 billion. Yeah, less action, more price. Meanwhile, Bitcoin dominance ticked up to 61.8%. The fear and greed index crawled up from 24 to 29 overnight. Seems like people are less fearful after Bitcoin added a few grands. Funny how that works. For alt's performance, the biggest winners are Compound, EOS, Fartcoin, and Bonk. The biggest losers are ACT, Mass Network, Guns, and Peanut. Let's touch on macro news and see what we got. The U.S. jobs market is starting to look like my portfolio after a rug pull. February's data showed job openings dropping, layoffs ticking up, and quit rates slumping back to the mid-2010s, when the economy was about as exciting as a stablecoin peg. Meanwhile, manufacturing's flashing mixed signals, and activity index tanked, but prices paid by companies? Up, way up. Sounds like inflation's doing a sneaky little moonshot, while jobs are stuck in the mud. Here's where it gets sticky. The Fed's sitting there doing nothing, because this combo of weaker jobs and stronger prices is like a bad trade setup. Normally, they cut rates to juice the job market, right? But with Trump's tariff threats looming like a margin call, they're worried about sparking an inflation bonfire. It's a classic dilemma. Do they save jobs and risk prices going full 2021, or hold tight and let the economy sweat out? Who knows? But they need to decide fast or they will be behind the curve again like last time. Time to go over to our crypto news next. U.S. lawmakers are clutching their pearls over yield-bearing stablecoins. The Senate's hashing out two bills, the Genius Act and the Stable Act, to slap some rules on stablecoins. But plot twist, neither of these bad boys includes a green light for yield-bearing options. Why? Well, Senator Kirsten Gillibrand's out here waving the red flag, saying if stablecoin issuers start offering interest, it could disrupt traditional banks. Oh no, won't someone think of the poor bankers and their private jets? There's this vibe like it's a showdown, lawmakers versus crypto innovators, with banks sweating in the corner. The acts are all about regulation and safety, but they're conveniently sidestepping anything that might actually make stablecoins useful for us retail. Makes sense, though. It's tough convincing a room full of politicians who probably still think Bitcoin is a Ponzi. Next story. Circle Internet Group, the folks who keep USDC chugging along, dropped a filing with the SEC, aiming to list under the ticker CRCL. They're gunning for a late April debut, which, if you ask me, feels like they're rushing to cash out before the next market dump. Financials? They pulled in $1.67 billion in revenue last year. Net income, though, down to $155.6 million from $268 million in 23. Ouch! Sounds like they're printing cash, but the profit party's losing steam. They've been trying to go public since 2021. First with SPAC that crashed harder than my altcoin bags in 22. Now they're back, riding the Trump-era crypto hype wave, with big dogs like JP Morgan and Citi underwriting the deal. Circle's showing off their $60 billion USDC market cap, second only to Tether's USDT, and how they moved $25 trillion on-chain since 2018. Speaking of which, this filing's timed right before the House Financial Services Committee votes on stablecoin rules. Coincidence? Yeah, right. You know who's having a bad time this month? Bitcoin miners. JP Morgan's dropped a report that's basically a funeral dirge for publicly traded Bitcoin miners. March was their worst month ever, with a market cap of the top 14 U.S. miners, like Mara, Riot, and Core Scientific, tanking 31%, shedding $8 billion faster than I dumped my Dogecoin in 21. Bitcoin itself took a 10% haircut, dragging these poor saps down with it. The banks yeah, the price dip hurt, but also, these guys are bleeding cash. Daily mining revenue per exahash, down 11% to 48.3K. Gross profit, slash 15% to 24.8K. Why the carnage? Well, the network hash rate, that's the total mining muscle, barely budged, up just 2 exahashes, while mining difficulty keeps climbing like it's training for the Olympics. More competition, less reward, classic crypto gut punch. And get this, miners dreaming about making money with AI computing got a reality check after some Chinese AI outfit, DeepSeek, flexed its cheap tech. Investors panicked, thinking, wait, maybe these miners won't be the AI saviors we thought. Cue the sell-off. Now, let's check out new developments in DeFi. On February this year, CRCL got hit with a $9.6 million exploit. Fast forward a month later, the hacker attempted to mix the stolen 2,930 ETH through Tornado Cash, a popular crypto mixer. But here's where it gets juicy. They fell for a phishing scam, sending the funds to a fake site posing as Tornado Cash. The hacker, realizing their blunder, sent a desperate Etherscan message to CRCL. I tried to move funds to a Tornado, but I used a phishing website, and all the funds have been lost. I am devastated. I am terribly sorry for all the havoc and losses caused. CRCL had previously offered a 10% bounty for the return of the funds, with a deadline that the hacker ignored. Some on-chain sleuths speculate it might be a self-orchestrated ruse, pointing to the use of an Ethereum vanity address, but there's no hard proof. Either way, the ETH is now lost to the phishing scammers, leaving the hacker empty-handed and CRCL still chasing shadows. Up next, Felix is a CDP protocol launching on HyperEVM on April 8th. It's coming with its flagship product, USD stablecoin, like a dollar-pegged holy grail. It's a Liquidity V2 ripoff, in a good way, letting you lock up Hype, BTC, whatever, to mint this bad boy, pegged at $1, with redemption tricks to keep it steady, and stability pools where you can stake FEUSD to snag yields and liquidation scraps. Felix is all about security and risk management, partnering with 3 Sigma, Antheas, and some trading firm called Manhattan Research to keep the liquidation bots humming. They're slapping mint caps on FEUSD so it doesn't turn into a shitcoin free-for-all, and leaning on Hyperliquid's order book to dodge slippage. Word is that early birds might score a retro airdrop if they mint or pool FEUSD, because nothing screams crypto like free tokens for the OGs. Last story. Binance waived bye-bye to USDT spot trading in the EEA as of April. Why? The EU's MiCA rules decided stablecoins like Tether need a license, a piggy bank in EU banks, and a transparency makeover. USDT didn't get the memo, so it's out along with a gang of 9 other stablecoin rejects like DAI and some Terra leftovers I wouldn't touch with a 10-foot pole. Not everything is affected, though. Perpetual contracts? Still fair game. Custody? Sure, keep in your wallet. Binance is pushing USDC and EURI like they're the new prom kings, 0 fees and VIP perks. Meanwhile, Tether CEO is whining that stashing 60% of reserves in EU banks is a disaster waiting to happen. He's not wrong. Imagine that uninsured cash pile going poof. Kraken and Coinbase already ditched USDT too. This is Europe's $2 trillion crypto sandbox getting a state overhaul. Binance is playing nice to chase that MiCA license. Today for our airdrop, we're firing up the grill on Hibachi, a hotshot perps DEX with a points program. Hibachi is this fancy new decentralized exchange flexing next-gen architecture, off-chain speed, on-chain ZK-proof wizardry, and a custom order book that's supposed to make trades faster than my panic sells in 22. Launched on Base and Arbitrum, it's got $5 million in seed cash from Dragonfly and Electric Capital. They're all about proof of solvency with smart contracts. To get points, start trading on Hibachi. Points drop every Monday at midnight based on how much you swap, plus extras for quests and referrals. What are quests? Think challenges with up to 60% multipliers. Trade this. Swap that. Max it out by trading smart. Spread your pairs. Hit every quest. Build a referral army. It's not just for whales. Consistency beats volume. The team said. That's the Fat Bear Pod take for Wednesday, fam. I'll see you guys tomorrow after this Liberation Day hits.